All right, what's going on, guys? Tremaine here, the most disciplined day trader on YouTube. We're going to do a real quick, real brief trade breakdown over today's trade this morning. So daily chart here, we have this fair value gap. Okay, in the weekly forecast, I'm expecting this fair value gap to stay open, and my drawn liquidity, my target for the week, is this imbalance here. So we traded to the high of that daily BISI with today's trading. So let's drop down to a 15-minute chart. So here we trade down to that daily fair value gap. It's high. We rally away. Market structure shift above the high. Come back down into the order block. Fair value gap. Rally higher. And this candle is the 930 open. Buy side here, really smooth from yesterday. That's kind of my focus for today's trading. We don't have to get that today, but this level, in my opinion, is way too clean. That's something that I have my eyes on. If we go to a 5-minute chart, get some more detail. All right. So sell side taken, relative equal lows taken. So we've done a lot of damage on the sell side here on a 5-minute chart. Last two down close candles, opening price to the high of the wick, draw it through, order block. And here is when Tremaine's model comes into play, okay? Whenever we're beneath both the 830 and the midnight opening price, I'm only looking for longs. Okay, your best opportunities to go long is beneath both of those opening prices. That's classified as a tier 2 setup. Okay, any long opportunities that's only beneath the midnight open and above the 830 open, that's classified what I like to call as a tier 1. So your really cheap discounted buying opportunities are beneath both of those prices. Okay, if you get in long above the 830, but you're still beneath the midnight open, okay, that's good too. I classify that as a tier 1 setup. All right. Now, we trade into the order block. Okay, we've already traded into the daily fair value gap, rallied higher, come back down, order block. We have a breaker, and we have an order block here on a 5-minute chart. So we have a low, high, lower low, and then these, what is that, 5 consecutive down close candles is one bullish order block. So for those who trade the 5-minute chart, if the 1 minute moves too fast for you, if you prefer 5-minute entries, we close, open, trade down, that's your buy. Or you have your classic breaker here, low, high, lower low, last up close candle in between your two lows. There's your breaker entry right at the high. Or you can see all the entries you can get in at inversion fair value gap. Fair value gap was used as resistance here. Once we get above it, close above it, next candle opens, uses it as support, there's your buy. Buy side draw on liquidity, midnight opening draw on liquidity. Let's go to a 1-minute chart. And you can see that 5-minute inversion fair value gap, but we're going to take that off for now. So here, just since 7 a.m., look at all the damage we've done, okay, on the sell side. Equal lows here, taken. Sell side, taken. Sell side, taken. Trading into the 5-minute bullish order block. We open at 930. Now, why the heck is this your first presented fair value gap? Shouldn't it be the 931 candle? Shouldn't this be your first presented fair value gap? Based on what ICT has just taught in his lecture video, your 930 candle is your first presented. Why is that? If we go to regular trading hours, and let's take all this off for a second, this is the rules he gave when to use the 930 candle as your first presented fair value gap. You see that low here? Obvious sell side liquidity, okay, on regular trading hours. That is important, okay? On regular trading hours, if we open up beneath the sell side at 930 and we form a fair value gap with that 930 candle, this is your first presented fair value gap, okay? Not this one. So when I was in the stream this morning, everybody's saying, you know, you had the wrong fair value gap marked up. Why aren't you using this fair value gap? Based on what ICT has just taught, and he posted on Twitter, he's using this one for today's trading as well, and he's drawing that throughout the week. We open beneath the sell side at 930 and form a fair value gap at 930. That's the fair value gap that I'm opting to use. But it didn't trade down into it. That's good. We don't want to see it traded to. That's a breakaway gap. Okay. Little consolidation in here. Then we rally. If it's really bullish, if the trade is really good and really strong, we want to see this stay open. I always teach people whenever we have two fair value gaps stacked on top of each other, the upper one, you want to see support price. The lower one, you want to see that stay open. And then remember, we had that 5-minute breaker. We also had the inversion fair value gap. You can even see that on a 1-minute chart. Okay, we have the 5-minute order block. We have all those factors. So do we really want to see it trade all the way down to the first presented fair value gap? No, because to do that, we're breaching mean threshold of the breaker. We're trading all the way to the bottom of the inversion fair value gap. That's not bullish. So this is the fair value gap that should take us higher. This is your tier 2 entry, buying beneath the 8:30 open and the midnight open. Okay, so my entry initially was on a 15-second chart, buying here, assuming we're done using this fair value gap. Okay, 6 contracts, I get stopped. I go back in immediately. I guess we could take this off so we can really see. Okay, 15-second chart entry there. I get stopped. I'm going right back in because the logic is this should stay open. Okay, do not want to see that traded to. So entry here, buying 6 more here as a pyramid, or sorry, 4 more as a pyramid entry. So I'm long 6 as a re-entry, buying 4 more. Clear, obvious buy side liquidity pool. Okay, what are the rules for Tremaine's model? I have that teaching on my YouTube channel. Take a partial above obvious buy side, leave a runner to the midnight open. So I'm taking off 4 above the buy side, taking off 5 at the midnight open, leaving 1 little runner on, and then I just close it because we're getting this chop here. And then I'm flat on the day. All right. So that is Tremaine's model in essence. If we're beneath both the midnight open and the 8:30 open, we're only looking for higher prices. We're only looking for longs, beautiful long setups. First presented fair value gap, which forms at 9:30, treated as a breakaway gap. This is your unicorn setup, sell side taken, market structure shift, fair value gap breaker, all that fun business. Then you have your partials and you have your midnight open there. Okay. So hopefully you found this insightful. And Discord members, we have our webinar in a few hours at 1:30. And then should the price action clean up later today, I'll send out that market review so you guys can study that. And then we'll be back live trading tomorrow morning at 9:15. All right. Peace.